Welcome to Ahead of the Curve. Subscribe now.
Welcome to Ahead of the Curve 1776. It is I, Mr. Curve. Hope you guys are finishing up, enjoying your weekend here. A lot to talk about, a lot of things to go over. The week that we just had was a tremendous week for trading. Pretty volatile as the week back from the Christian holiday. If you're new to the channel here, we talk about everything from economic data, monetary policy, politics, market, and trading strategies. So let's get to it. Here's the home page here, guys. Please like, comment, share on each one of the videos, guys. Phenomenal content, if I do say so myself. Big thumbs up to the 6.1 K subscribers, 1,000 subscribers. I appreciate each and every one of you guys. Thank you for liking each video, joining the channel as well too. Please join the channel for $5 a month. Just for $5 a month, you will help sponsor the channel, help get the channel to where it needs to be so we can add more content, more people, maybe get some people on, and etc. Also Patreon, that's where I do my trading alerts over there. The $5 a general trade signal over there, and then the $25 a little bit more in depth, also with targets as well as stop losses. Also, my links to get yourselves in the game. We got Robinhood here. We do have Webull as well. Please use that as well. FX Choice or Contract for Differences, phenomenal. ECN Broker, and also EToro for cryptos. There also, check out the feature channels. They keep me up to speed on what's going on. So let's get to the markets and let's get to the money. So we left off on Wednesday. We typically do videos Wednesday and Sundays here. So we did have the Bank of Canada keep rates the same, definitely standing on what they believe is a stronger economy for them, as well as a cooling economy for the U.S. here with the lower CPI, 5% year over year. That puts a lot of things into perspective as where we go forward from here. That's a really cool number, cooling off number here, and at some point we are going to get the two prices, going in opposite directions. The Fed funds as well as inflation, they will cross paths there, and then we'll probably see a more, accommodative stance. We also had the FOMC minutes as well. Powell did hint at a recession possibly in the forecast here, or that we will get to one. I mean, I think it's kind of obvious. A plus B equals C. Keep rates too high, withdraw liquidity, bam, recession, right? We will have that at some point. Also, Australia's employment situation is getting pretty strong there. They had some negative readings, but they're still at that great 3.5% and 53,000 jobs there, which is not bad. We had the UK definitely pulling back a little bit as far as their economic activity. GDP month over month is definitely going to probably go in the opposite direction here. It's kind of been going back and forth, but it's definitely been staying the same, which if it's not going up, it most likely means it's going down. We also have the U.S. core PPI. That was negative for Thursday. Now, that actually had the inverse, actually had the positive effect, the positive correlation effect, where basically that guy actually did weaken the dollar substantially. We've seen gold shoot up a lot. We've seen silver shoot up. We've seen WTI. We've seen a lot of dollar weakening, especially amongst the cross pairs as well, too, joining in on that action. We also had Governor Macklem spoke as well. Scroll down with the G20 meetings. We also had some G7 meetings that I'm actually getting alerts about. We scroll down here. Didn't update this on this platform for a while, so let's go ahead and check it out. And then last but not least, we did have those core retail sales here. That was the big ticket item that most people were watching for. The core retail sales were negative. I mean, they were forecasted to be negative. We did have a little bit of a situation. I'm not sure why the PPIs were not actually negative here, because they were actually forecast to be negative just based upon the trend. We had a previous forecast 0 number goose egg, and then we should have been forecasting a lower number there just due to the trajectory of how it was going. It was definitely going in a negative territory, so we definitely did have that happen. We have the unemployment claims tick up a little bit on Thursday there. That is a key indicator. They indicated that would be a high alert. Then core retail sales fell off the map there, guys, and we are a consumer-driven economy, so this is a really big deal. We're starting to get a lot of different situations where people are coming to a realization that this is going to be a bear market at some point. Whether that's with the Feds keeping rates too high, people coming to the realization earnings won't be quite where they are. We are almost, I think, 50% of the way through summing them there, so we'll check out more of those as they come along here. Then we have the capacity utilization. That's still up. Industrial production is still up. Preliminary University of Michigan. Now, of all of these economic reports, this is the one I discount the most. They cherry pick 500 consumers, and then they ask them, hey, is everything going well? Is it or is it not, right? Majority of them are going to always pretty much say that it's going well, guys. We have very rarely had any reading that was too bad there. I mean, it's just pretty much, I mean, they cherry pick these guys. I mean, they're never probably going to give you a total total idea of what actually is going on there. But yeah, all in all, guys, it wasn't too bad. I mean, it was a decent trading week. I did lose a trade on Thursday just due to the way my algorithms are set up for it to be a positive number and then to be negative. It definitely had the inverse effect for me for a trade. But then also, I won again on Friday. So, it is what it is. This is the first week back from the Christian holiday. It's a very big deal. It's still volatile compared to other weeks coming back. So I do expect trading Asian session tonight going into this week to be more placid compared to other trading. So I definitely do expect it to be a little bit better for next week. So if you had some in and out trades, positions sitting sideways, it was just due to the shortened trading week. We should be full swing coming back here. And just like the thumbnail, convergence is coming. We are going to see what the Fed is doing and what the markets think that they're the way it's going to go meet in the middle. We are going to see both of those things come together because at some point somebody's got to be right. The two chickens are running at each other. We're seeing the two trucks heading towards each other. Someone is going to give up, right? And we will see. And just so you guys are aware, the Fed has a lot more deployable capital than you or I or a lot of these big players. So we're going to see at some point they get in line. Let's go to the week ahead, and we will talk about that there. So we got a little bit of a difference of some numbers. So we got the Empire State Manufacturing. That's typically not a high indicator there, but it will be for Monday, and that's at 7:30. So I will be prompt on Monday. I'll be at my desk probably about 8 o'clock just to make sure that I can digest that information because it's going to be pivotal, especially for the trading day going into the week. So we get a negative reading on this or a positive reading. That's going to allow a lot of capital to be deployed, maybe about the 8 mark, 9 Eastern Standard. And then maybe you can capitalize on certain things there as well. We also are going to have, as later as the day goes on, ECB President Lagarde actually will speak. We also are going to have China's GDP quarter over year. We're going to see what those numbers look like. That's going to move the market as well too, and that will be a buy a rumor, sell the fact. That will be a buy the rumor, sell the fact moment for sure. So I expect maybe some lead up to that, maybe some buying going on. Then maybe about 30 minutes probably before the actual trading situation, for the release. That'll probably be when the markets will probably wait for the release. And then we'll scroll down here. We got the claimant count, which is there, which is the UK's unemployment situation. We're going to see if that ticks up or if that actually recedes there. Scroll down here. We got the German Zoo economic sediment that is there, basically preliminary University of Michigan sediment there. We're going to see if that is going to raise up there. We got some CPI data from Canada. It's going to be pivotal because if we see higher numbers here, that's going to be make the Bank of Canada more inclined to raise those rates a little bit further, maybe a quarter point or maybe a half point. Governor Macklin will speak after those readings, right, to kind of jawbone them and see what that's going to look like. We also got the CPI year over year, 9.8, guys. We're about half of what the UK is, so technically they probably should be hiking at some point. Let's scroll down here. Let's see where they're at. They are at 4.25. We're at 5, so probably a few more hikes is going to be in there. Is down the line for them as well. Let me go back to where we were here. All right, perfect. Yeah, CPI numbers here. We also got the CPI for New Zealand. That will set the tone for Thursday morning for Asia's session there. And then we'll have the unemployment claims as usual. The consumer confidence, it's a pretty big number, even though that this is a light indicator, and then existing home sales as well. But this is what's going to be pivotal. What's probably going to move the markets for that Thursday heading into the rest of the trading week to finish it out. Those are negative readings pretty much for the most part. We are seeing that unemployment claimage or claims tick up there. That's going to be pivotal. Going to get some job owning from Macklin as well of an FOMC member, Bowman. And then last but not least, Friday's PMIs. PMIs galore is going to have pretty much PMIs from the Eurozone, the UK, as well as Canada and the US to top it off, right? So we're going to have a cascading PMI effect there. We're probably going to have most of these readings be below 50, so we are going to have, we'll probably have some people be, we'll probably have the Probably Canada beat, maybe the UK beat a little bit since they are on the lower end of the spectrum for that, or they could just be totally negative. As you guys can see here, we do have a diversion between the two, and then we're probably going to see the Eurozone probably definitely be under 50 there. They're not even that high on the scale as far as the difference there, and then if you were doing the carry trade, it's definitely playing out pretty well. So all in all, guys, a pretty pivotal week. I think this is a healthy trade week. We have a full week back outside of the Christian holiday week of the shortened week. Volatility is always dry, always a little bit lower as far as trading volume goes. Even though we had some healthy bit year over year, we probably had a little bit more healthier bit of trading volume, because I was gauging that throughout the week. So that definitely was pivotal. It did help to push certain trends in a certain trajectory, especially on the Elliott wave form. So all in all, guys, I'm pretty stoked for this week. I'm looking to make some money. I'm looking to make some pivotal changes. We're going to see that convergence happen. It has to happen this week. I think it will happen this week, just due to the fact that we had those huge pullbacks. We did have the markets digesting these numbers more accurately than before, because before they would see the number and they just would keep going on with their notion of what they thought. Now they're coming to the realization that maybe it is higher for longer, like the last video. But that's the week ahead, guys. Let's go ahead and get over to the Euro/US dollar, where I see let's digest what happened and let's see where I think that's going. Look at this here. US dollar bounced, but is it sustainable the week ahead from them? Yeah, possibly, right? I think it is, because like I said, that convergence is happening. We are seeing that happening in real time. I'm keeping you, just like this channel intended, keeping you ahead of the curve, because I'm going to tell you, Friday, which we'll get to, gold and silver definitely did pull back tremendously, and that was pivotal. It literally pulled back so much I didn't even think it was possible. It went outside of the 1 hour, the 1 hour for sure, and then it's looking like it might change the 4 hour at some point. But we'll take a look at this. Look at the 1 hour for this guy. We had this guy pushing up, which means it was dollar weakness if it's on the uptrend here. We started out the week pulling a little bit of weight there. I told you that we would get a stronger dollar with less of activity. Then we just definitely shot off with those weaker numbers, the CPI as well as the PPI on Thursday. And then Friday, we did have the sell-off. We had the huge sell-off of the markets there. I think it was at this turning point where people basically got out of the trades. It was a little bit of a couple of things. People got out of trades, right? They, the Eurozone actually closed up a lot of their trades to start the morning, and then we just had that huge sell-off there. Now, for the first time, we had something happen that we typically have never really seen like that. We are starting to see the 08-09 effect of things slowing down. At one point, we started to see, once those negative numbers came in, it was bad for the dollar. But now we might be getting a little bit of both, guys. We might start seeing the dollar respond more deflationary compared to inflationary, just due to the fact that these numbers are starting to get bad, which means in real terms, people are not spending as many dollars, which means that it's going to be overall deflationary. Despite the stance of the Federal Reserve, it's going to be deflationary. And again, until they get that inflation back to that 2% target, we are going to be in a deflationary stance, because I believe they will not probably do anything until they see that 2% target. Will I think they'll achieve that target this year? Absolutely. They are currently on pace, from what I've read, what I've seen, and being in these markets, they're probably going to be on pace to be at maybe a 2% before year end, at least a 3% for sure, but maybe 2% before year end. We're definitely slowing down a lot, and then we could possibly see this guy, let's go out on a daily chart, we could possibly see this guy get back to the 106, the dollar index shoot up as well too. So be careful, guys. This is why I'm a day trader. This is why I don't hold positions for very long, just due to the fact that you never know the nature of the game. And one thing I have found after 20 years of trading is basically, if everybody's piled into one position, the market makers will push it the other way to make some people lose. So just bear that in mind when you are deploying your strategies. In order to win, some people got to lose, unfortunately, in some of these markets. So check it out, guys. All in all, it's a pretty crazy week. ECB Lagarde, can't imagine US defaulting on debt. Yeah, that's not going to happen. But yeah, definitely where I see this guy going for the week. The economic data is not looking too great. Let's go back here. Although I probably see this guy probably picking up a little steam here. Maybe the numbers won't be as worse as we think, or we'll get that deflationary stance of where the numbers are bad and we get that market sell off and people are running to dollars. So again, guys, it's going to be how the market digests it, but that convergence is here. I've already seen it expressed a couple times, and Friday was a pivotal moment. We had that huge run to dollars here, this dollar getting stronger as it's going down here, and we definitely are starting to see that. Will it sustain? Who knows? I think it will, just due to the fact that things are getting pretty bad out there as far as the economy. So we might see the 08-09 effect, right? And then maybe we will see the 2010, 2011, 2012 effect afterwards, but we have to go through the deflationary period in order for us to start this over again, start the new monetary cycle over again. So that's what I think. I know I ran on a little bit for that, but I want you guys to really understand how these inner workings, how all this works, how it really goes down in the markets, how people should digest it, and how they can stay ahead. Where I see this guy going for the week, maybe the 109 area, probably getting back to that. If we get a little bit of worse data from other countries, might be a stronger dollar there for the week. And then maybe on Friday we'll give a little bit back with those lower, maybe better than expected PMIs from the Eurozone, and then worse or expected numbers from the US here. So we'll have to see how it plays out. And if we get a sell-off, guys, that sell-off is going to push people in more dollars, and we might see things go the other way. So let's check it out, guys. Let's go ahead and get you guys now over to gold/US dollar. Let's see where what the week ahead is, and then where we were. So here's the monetary metal here, guys. It definitely had its phenomenal run up here. I couldn't believe my eyes watching this. It's been a little while. Been roughly about, I think, 12 years since we've seen it. So basically shot up above that 2,000 threshold. It did it a couple times here, but couldn't really get over that 240 mark, 230 mark, and it definitely shot up there, $2,048 from what I can see here. But then we had that huge sell-off. I'm pretty sure some people bought right in here, guys, thinking that it was just going to go to the moon, and sold off. But again, guys, if you're holding this for capital preservation, it doesn't matter. But if you're holding this as a trade, depending on how many lots you're holding or what your position was or your stop loss, it's important. It's monumentally important that you got out at a good stop loss, and maybe you took the counter trend and you got in here. Now, from what I can see here, we could start the new wave here. We got the 1, 2, 3, 4, 5 run up here, and then after that 5, we had the we definitely had a little bit of a down here, and that up, and then we just definitely took off there for the corrective territory. So yeah, guys, I mean, all in all, this did follow the pattern. You got to be, I didn't think it was going to be exacerbated like this, but you got to be careful, guys, because those numbers, now when those numbers were released, negative readings, right? You would have thought that maybe this guy would have shot up even more, right? Because the policy would have to be more accommodative, but that's not the case. People are realizing that this is the 08-09 situation where they are going to tighten until something breaks, until the dollar is strong. And now they have more incentive to do it as ever, right? They have to maintain that reserve, global currency. They have to maintain the dollar's dominance. So yeah, they're going to trade in the markets for the dollars, guys. They're going to trade in the economy for the dollar. Maybe they'll start again, but for right now, guys, it's too pivotal outside of the U.S. for them to lose that status. So too many people hold dollars internationally, so they cannot have that take place because that is what our whole regime was built on. So yeah, guys, where I see this guy going, maybe hanging his hat around the 2,000. I mean, I don't see it getting much higher than this. I think if it breaches that 1975, we're shooting for a 1900 handle on that. Be a great buying opportunity for a lot of people who do hold this as a capital preservation, because in real terms, guys, obviously everything else will be going up in price, but the actual spot price will definitely be going down. Yeah, look at this Elliott wave analysis. So all in all, guys, it's not too bad. A lot going on. I see this guy definitely being below the 2,000 mark. That psychological level was breached, and a lot of people are not fit to handle a 2,000 plus greater gold. And then also the market as well. I mean, they're not stupid. They know at some point you got to get out with a little bit. Let's check out silver. Still hanging his hat above the 25 mark, which isn't too bad. Ran up to about the 26 mark there. Yeah, 26.04. Pulled back significantly though. I mean, that is a huge percentage. And again, guys, that number, we're starting to see that convergence. We're starting to see the market setting themselves synonymously of what's going on, and which they need to be in sync. We need to be able to predict price action, because if we're not, it's going to be a bad situation. We need to know. And where I see this guy going, probably back to the 24 handle. We get some negative news, maybe a little bit higher, some headline risk, maybe a little bit higher, but I see this guy pulling back, guys. The numbers are starting to get pretty bad, and people might be in a risk off sentiment. So that's where I see it going. Let's get you guys now over to WTI/US dollar, where I see it going and what happened for the last week. Now, out of all the commodities here, WTI is definitely very stubborn, guys. WTI is holding its head well above the 80 mark, at the 82 mark. Could it get a pullback? Possibly, but just due to all the geopolitical situations going on, and then also the threat of the BRICS situation and the Saudi situation, I'm not so sure, guys. We probably will be hanging above the 80 mark. Also, this will help push the deflationary stance, because if anybody's old enough to remember getting back to that $150 a barrel, that was a big deal back in 08, 09. And if we get back to $100 a barrel, we will push the deflationary factor even forward, because people will not have as much money to be buying other things. And if they can't consume, even though we're 70%, that means we're overall bad, right? That means people will have to, obviously, this to me is a fixed cost. Why it's not included in the CPI is important. is important for a lot of different factors and situations that are geared towards the tying of what these metrics are. I'm gonna keep it ambiguous there, but basically, yeah, guys, I see this guy probably getting to the 85 mark. This is the only commodity that I probably see pushing up a little bit here. Could it pull back? Sure. Maybe people will dump it in trading. Probably, it's possible. But I'm seeing it's going to hang itself pretty high, because on the 1 and the 4 hour chart, it's still hanging high. We got some candlesticks, and a lot of this situation was geopolitical. A lot of different trading agreements that were signed that are different, or not using US dollars is different. So, and turning those dollars in, right? So we could still have that stance going forward. So that's why I'm still a little bit bullish on that. Can we get a correction? Sure. Is it due for one? Absolutely. But I don't really have a price target for this, guys. Maybe 85 mark I would get out if this was a situation where I would be trading maybe the 85 mark. But other than that, guys, the dollar is still overall weakened. We'll talk about that in the dollar index, and that is directly, for me, translated more accurately through WTI/US dollar, as opposed to the pairs trading themselves. I see that typically expressed positively correlated with WTI. Let's get you guys now over to Bitcoin and where I see that going. So I just want to show you guys here, Ethereum is absolutely taking off. We had that 19 threshold breach. We had that 21 threshold breach, and that market cap is still relatively the same, roughly almost 30% if you round up. Bitcoin definitely is sitting at that 30 mark. It definitely made a little bit of a squeak of a gain for the week. I think maybe like, I don't know, 1.5% or something like that, 1 to 2%, which wasn't too bad there. This trades 24/7, so we definitely did have a little bit of a run up to the 31,000 almost there, and then it definitely pulled back with that selling of that strong dollar for Friday. This is definitely heavily correlated to the dollar, guys. Whatever the dollar is doing, this guy will do. Be careful at that $30,000 threshold. It's been sitting here for too long, 29, 30,000, and you guys know my philosophy. If it's sitting, if it's going up, it's going up. It has that momentum, right? The CCI momentum still moving. But if it's going down, if it's staying sideways, it is most likely going down. And it is setting itself up here. We have a couple of tops here, and we're in this, consolidated period. So I definitely think you guys should get out. I think I'm getting out. I'm not really in it anymore, but I would definitely get out. Make sure you guys do your due diligence on your own. But yeah, guys, I don't see this guy possibly going much higher, especially if that dollar gets strong. A lot of people took this run up. Let's go out on the daily. I got in about here, left out about here. That's a nice little return on a month-over-month basis. So, is that going to happen every month? Probably not. We have seen Bitcoin be very volatile. So I don't think so, guys. And then, so many different things are going on. So if this is your thing, then you do it, but not for me, guys. So let's get you guys now over where I see it going for the week. Probably back to the 28 mark, unless something crazy happens. We're consolidating here. I think we're probably going to take a little bit off, maybe reach one of the support levels, and then possibly retest up to the resistance if we get some bad news. But look at this Bitcoin to pull back next week. we'll see, right? That 29, 30,000 handle, we'll see. Let's get you guys now over where I see Ethereum going, though. Let's go back here before I move on. I think Ethereum definitely has a lot of room to run. A lot of people are getting into that. If we check out a 4-hour chart here, it's definitely moving up here. Could it pull back to the 2 mark? Sure, that might be a psychological support level first, maybe taking out the 19. But if it gets up to that 22 mark, that's going to be pivotal. And again, it could do that just with people definitely getting into that trade. Let's get you guys now over to the dollar index. Got a few things to talk about there before we wrap up the video. Now, the dollar index definitely took a beating this week. It looks like it was on the ropes for a lot of the time, and definitely threw that one counter punch before the end of the 12th round to get itself back into the scorecards. But where it'll ultimately end, who knows? The dollar does have the longevity. It's got the wind, so we'll see. Maybe it's and then it's got its the Fed in its corner right now. Plus, we got the economy slowing down overall period anyway, just due to all the liquidity for the last couple of years. So maybe it's going to be on its way. Let's check out a 6-month here. You see, we're at the 112 mark starting the 4th quarter there, and then we just definitely sold all the way down, guys. We are definitely due for a corrective upswing here, probably maybe back up to the 103, 104. Long term, though, I do see the dollar index going down overall, just due to the fact that they are on the top end of the interest rates, and then a lot of economies that are on the bottom end of interest rates will probably diverge. We'll probably see them move up and then the dollar come down, just due to the dollar interest rate sliding back down in an accommodative stance. So I definitely do see us pushing back up a little bit. Where a price target, I mean, I can go out on a week here, maybe back up to the 102.50. Probably we'll get around there probably at some point in the week, and then or maybe we'll test that 100 there, and then we'll see where it goes from there. Let's get on over to the Fed tool here. I kind of want to show you guys a few things. 83.4% chance of a 25 basis point rate hike. I think it's pivotal, guys. I think that's going to crush a lot of people. I think people have this notion that they got it figured out. They know exactly what's going to occur. The Fed is going. They know the Fed's hand. We're all playing poker, and they know the Fed's hand. But I'm gonna tell you, the Fed's been telling you the whole time. Sometime you gotta believe them, right? When people, what is it? The phrase is, when people show you who they are, believe them. In this situation, they already showed you who they were. They waited a little too long to raise rates, and now they may stay a little too long to lower them. So definitely believe them. 83% chance of a 25 basis point. Let's go out to the June meeting. We still got us in that range of about 70% holding stance, and then we got July meeting here. Still holding stance majority. It may be dropping by September. So we have a lot of room to run up for that dollar index to get from between now and September. So we might be in a very deflationary stance up until possibly getting into the 4th quarter, which is good for me because I'm tired of wrestling with you guys in the market about what's actually going on. People trading one way, people trading the other way. We need to all be in sync here so that way I can make some easy money, right? That's what it's all about. So I appreciate each and every one of you guys. Let's go over to the U.S. markets here, even though they were closed. But they finished in negative territory for the week. For the day there. VIX still below that 17, and I love seeing that number under the 20, right? That means I can predict price action, right? Remember I was telling you guys about that. All in all, guys, a lot going on. Keep your eyes on this guy. And again, they've already took a punch with the banking crisis here shortly. So they're going to be even more keen on what's going on. They're going to be more locked in. They're going to be more focused on their stance, which means that that's bad news for equities. It's bad news. We're going to probably see bonds ticking up a little bit here. We'll probably maybe see them get back out of the inverted situation maybe at some point. But all in all, guys, because they may come to the realization that, hey, these yields are rising. We're going to be in a better position overall from a dollar standpoint, right? From a treasury standpoint. So all in all, guys, I appreciate each and every one of you. Please like, comment, share, subscribe. Hit that bell notification for the latest video. Join for $5. Now head on over to my Patreon. Join that too for $5. Please do it because I'm asking you. And then the $25 gets you in on the alerts from each trading day. I probably maybe post 2 or 3 alerts for the 25, maybe 1 a day for the 5. But they're pivotal, guys. This is from a guy who deploys a lot of capital in these markets and makes sure that I trade each and every day. I trade forex, trade gold, silver. I trade WTI, trade Bitcoin, trade the dollar index as itself. So definitely get yourselves in the game. Stay ahead of the curve, and as always, In order to be profitable, one must have the knowledge and insight about the next trade or position to. You guys already know. You've been here for a little bit. Stay ahead of the curve. Appreciate each and every one of you, and I will talk to you guys very soon. Happy trading.